couple of segments ago, we discussed U.S. inflation, the U.S. Fed and what they're doing. Now we're going to get into Canadian inflation. And Canadian inflation numbers have dropped significantly, in my opinion. Last reading that we received just the other day, we went from 5.2% down to 4.3%. A fantastic drop in inflation. And wanted to read some interesting numbers for you. I have them here. Some interesting numbers I think some of our viewers would like to hear. Mortgage interest costs were actually up 26.5% in March, up from 23.9% in February, the largest yearly increase on record for Canadians as they grapple with the renew or initiate mortgages on higher interest rates. So from a mortgage perspective, it is definitely costing individuals a lot more to borrow money to buy a home than it did a year ago, which we obviously know. However, we're seeing gas prices down 13.8% in March. We're seeing food prices actually drop to 9.7%, down from 10.6% in February. So we're now seeing food costs drop. I don't know if you're seeing that in your grocery bills, but we're definitely starting to see that. Gasoline prices have been down from their peaks for quite some time now. All these things have helped our inflation rate fall. And interesting, we have a chart here, 12-month change in consumer price index or inflation in Canada. And so what you'll see is we're down to 4.3%, and core inflation is a little bit higher, 4.5%. So when you strip out energy and oil, you're slightly higher. I think probably the most powerful chart is our next chart, which shows that when you look at inflation now at 4.3, it is actually lower than the bank rate itself. The overnight rate from the Bank of Canada is 4.5%. And I've heard many times over the last year and a half that the Fed and Bank of Canada won't stop raising rates until the bank rate is above or equal to the inflation rate. Well, guess what? We have that here in Canada. And we've been able to bring our inflation levels down. Bank of Canada has done this, and they haven't even raised rates in the last few meetings. Whereas in the US, they seem to think they need to continue to raise rates. And if they raise it one more time, a quarter point, their bank rate will be equal to or above their inflation rate at 5.2. If they raise a quarter point in May, their rate will be 5 to 5.25. Again, it's a range where their inflation rate is 5 or 5.2%. So we're now getting into the area where the bank rates are equal to the inflation rate, which tells me we're pretty much at the end of the interest rate hiking cycle, definitely in our country, in my opinion, but also in the United States as well.